Welcome to Infotech Stocks, your go-to channel for the latest updates in tech and stock markets. This video is AI generated and purely for informational purposes, but we've done the best research to bring you the most accurate insights. If you enjoy cutting-edge news like this, make sure to hit that like button and subscribe for more updates. Are you ready to uncover some hidden gems in the stock market? You know, the kind of opportunities that get you excited about the future of your portfolio? Today, we're diving into 3 undervalued stocks that I believe are poised for significant growth as we approach 2025. We're talking about companies with solid fundamentals, a track record of performance, and most importantly, a compelling story that suggests they're just getting started. Because let's be real, who doesn't love finding a stock that's been overlooked by the market, just waiting to explode? Stick around, and by the end of this video, you'll have a better understanding of why these 3 companies could be fantastic additions to your portfolio. Remember, this isn't financial advice. It's about empowering you with the knowledge to make informed investment decisions. First up, let's talk about PayPal. Now you might be thinking, PayPal? Isn't that old news? And yeah, they've been around for a while, but here's the thing. Sometimes, the most established players are the ones best positioned for a comeback. Think about it. PayPal is practically synonymous with online payments. They've got a massive user base of over 429 million active accounts. And that's not something you build overnight. It's a testament to their brand recognition and the trust they've established with consumers around the world. But it's not just about their history, it's about their future. The global digital payments market is projected to grow exponentially in the coming years, and PayPal is strategically positioned to capitalize on this trend. They're constantly innovating, expanding their services beyond just online checkout to encompass things like peer-to-peer payments, mobile wallets, and even cryptocurrency transactions. Now, I know what you might be thinking. Their stock price has taken a hit lately, down 71% to be exact. But here's the thing about dips like this. They can create incredible buying opportunities for savvy investors. When a company with strong fundamentals experiences a significant drop in its stock price, it's like the market is putting it on sale. And that's exactly what I think is happening with PayPal right now. This isn't some fly-by-night tech startup with an unproven business model. PayPal is a well-established company with a proven track record of success, and they're operating in a market that's only going to get bigger. Of course, like any investment, there are risks to consider. Competition in the digital payment space is heating up, and PayPal needs to stay ahead of the curve to maintain its market share. But given their brand recognition, their massive user base, and their commitment to innovation, I'm confident that PayPal has what it takes to weather the storm and come out even stronger. Remember, we're looking at this from a long-term perspective. The goal isn't to get rich quick. It's about identifying undervalued companies with solid growth potential and holding on to them for the long haul. And when you look at it that way, PayPal checks a lot of boxes. They're a leader in a rapidly growing market. They have a strong brand and a loyal customer base, and they're trading at a significant discount compared to their potential. To me, that sounds like an opportunity worth considering. But don't just take my word for it. Do your own research, look at the numbers, and decide for yourself if PayPal deserves a spot in your portfolio. Next up, let's talk about a company that's tackling one of the most pressing issues of our time, cybersecurity. I'm talking about OKTA, a leading provider of identity and access management solutions. In a world where data breaches are common, companies need reliable ways to protect their sensitive information, and that's where OKTA comes in. They provide tools to secure applications, manage user access, and prevent unauthorized entry. Every time you log into a website or app, that's identity and access management in action. OKTA provides secure and seamless access for millions of users across thousands of organizations. But it's not just about protecting against hackers. OKTA's solutions help businesses streamline operations, improve productivity, and comply with data privacy regulations. They're not just a security company, they're a business enabler, and the numbers speak for themselves. OKTA has been growing at an impressive rate, with revenue consistently increasing year over year. They're also making strides towards profitability, which is always a good sign for investors. Now, I know what you might be thinking, cybersecurity is a crowded market. And you're right, it is competitive, but OKTA has a few key advantages that set them apart. First, they have a cloud-native platform, which means their solutions are scalable and easy to deploy. This is crucial in today's fast-paced business environment. Second, OKTA has a strong focus on customer satisfaction. They're known for excellent customer support and long-term client relationships. In a world where software can be complex, having a trusted partner like OKTA makes a difference. And third, OKTA is constantly innovating to stay ahead in the cybersecurity landscape. They're not content to rest on their laurels. They're constantly pushing the boundaries. Now, I'm not going to sugarcoat it. Investing in cybersecurity can feel like betting on the bad guys. The more cyber attacks there are, the greater the demand for OKTA's solutions. But that's the reality of the world we live in. Cybersecurity is not a luxury, it's a necessity. And as more businesses realize this, companies like OKTA are well positioned to reap the rewards. Of course, like any investment, there are risks to consider. Competition in the cybersecurity market is fierce, and OKTA needs to continue to innovate and execute flawlessly to maintain its leadership position. But given their strong track record, innovative technology, and growing market opportunity, OKTA has the potential to deliver solid returns for investors over the long term. Finally, let's shift gears a bit and talk about a company that offers a different kind of opportunity: Federated Hermes, or FHI. Now, Federated Hermes might not have the immediate name recognition of a PayPal or an OKTA, but don't let that fool you. This is a company with a rich history and a bright future. In a nutshell, Federated Hermes is a global investment manager. They manage trillions of dollars in assets for individuals, institutions, and governments around the world. We're talking about a company that's been around for decades, weathering market storms and economic downturns, and emerging stronger each time. Now, I know what you might be thinking. Investment management? That sounds a little boring. But here's the thing. Boring can be beautiful, especially when it comes to investing. Federated Hermes isn't about chasing the latest fads or jumping on the hottest trends. They're about disciplined investing, long-term growth, and managing risk effectively. And in a world where the market can feel like a roller coaster ride, that kind of stability can be incredibly valuable. So, what makes Federated Hermes an attractive investment opportunity? Well, for starters, they have a diversified business model. They manage a wide range of investment products, from stocks and bonds to real estate and private equity, which helps to mitigate risk and provide steady returns. They also have a strong track record of performance. Over the years, Federated Hermes has consistently delivered solid returns for their investors, outperforming many of their peers in the process. And in the world of investment management, performance is king. But it's not just about past performance, it's about future potential. The global asset management industry is expected to continue to grow in the coming years, driven by factors like an aging population, rising wealth in emerging markets, and the increasing complexity of financial markets. And Federated Hermes is well positioned to capitalize on this growth. They have a global footprint, a strong brand reputation, and a team of experienced investment professionals. Now, I'm not going to sit here and tell you that Federated Hermes is the most exciting company in the world. They're not developing cutting-edge technology or launching the next viral social media platform. But they are a solid, dependable company with a long history of success and a bright future ahead of them. And sometimes, that's exactly what you need in your portfolio: a steady hand to balance out the more volatile investments. Of course, like any investment, Federated Hermes comes with its own set of risks. The performance of their investment products can fluctuate depending on market conditions, and there's no guarantee that they'll always be able to outperform their competitors. But if you're looking for a well-established, financially sound company with a history of delivering solid returns, Federated Hermes is definitely worth considering. So there you have it. 3 undervalued stocks that I believe have the potential to outperform the market as we head into 2025. Remember, this isn't about jumping on the latest bandwagon or trying to get rich quick. Investing is a marathon, not a sprint, and it's about making smart, informed decisions that align with your financial goals. Investing in undervalued stocks requires thorough research and a keen eye for market trends. Don't just take my word for it. Dig into the numbers, understand the businesses, and consider your own risk tolerance before making any investment decisions. If you found this analysis helpful, give this video a thumbs up and subscribe to Infotech Stocks for more insights into the world of investing. Share your thoughts in the comments below. What stocks are you watching as we head into 2025? Remember, your engagement helps us bring you more valuable content. Happy investing!